My name is Sipia Masafi John. Welcome to our John Masafi 1477 YouTube channel. I'm mostly located in Mombasa, but most of the functions also will be done from other areas or towns or cities in Kenya. Today, I want to teach on accounting. Our first lesson is on accounting. And the first thing is, what is accounting? And probably, who are the users of accounting information? Why is it important to prepare accounting books or to have software on accounting? For example, application software like QuickBooks or Sage. Why is it important? Right? So it is an introduction. First, the profession of accounting is very old, right? If you can remember, even in Africa and in Kenya, we had the long distance traders. Some were coming from Kampala to Mombasa, and when they arrive here in Mombasa, especially at Mariakane, they will love to exchange their wares, their goods, which means they must know what they have and the unit prices, what they have sold, when it is almost getting finished, the stock out, so that they can ask for replenishment or even go back again to hub country for more goods. So you can see, we might have not had recording, but of course there was some accounting taking place. So basically, from a layman's perspective, accounting is just coming from the word to account, right? And what are you accounting for? I'm accounting for what I bought. These are the records of what I bought. So the word recording comes in. I'm accounting for the price at which I'm selling these items at, and this is the total price and total value. Then I'm writing those people I have sold to, and they will pay later. We call them debtors or account receivables. Then I'm also accounting for those people we have bought goods from on credit. We call them creditors or account payers. So the first part of accounting, we call it bookkeeping, from the word books and keeping. And it's about keeping records in some official books. In fact, many people do keep records, maybe not in the formal ledger books or journals, but even if it is in an Excel book, they are records. Okay? In the modern world, we are also keeping records using application software or packages. Now, so accounting starts from bookkeeping, and the bookkeeping now here is about keeping records. To be more formal then, we can keep records in some books we call books of original entry or prime entry books. Alright? These include, number one, the sales journal, the purchases journal, return inward journal, return outward journal, the general journal, the cash book. Alright? Now these are the books, so long as you have these books, I can tell you, an accountant can prepare final accounts from those books. As simple as that. That is called bookkeeping. We will be zeroing in on those books later on. Now, from bookkeeping, it moves to other branches of accounting, like financial accounting. Okay? Financial accounting is about interpretation, it's about summarizing, it's about attaching more importance and interest to bookkeeping. Remember, one of the good factors of good information is brevity. So we need to summarize what we find in the books of original entry. We need to condense it for easy understanding. Remember, as we will see later, accounting or records are not for only accountants. They are for stakeholders who can include a farmer who's a shareholder in Safaricom Limited company, right? Yeah, so we make sure we simplify the accounting, and that's why the National Financial Reporting Standard 1 and its amended tries to help us present accounts in simple, straightforward manner. Simple, straightforward manner. Now, when we talk about financial accounting, then what are we saying? We are saying we want to improve on the bookkeeping, right? That's where now we may have an accountant coming. Initially, we had a bookkeeper. Now we have the accountant, because now you now attach more importance to general record keeping. Now, so financial accounting includes what? Number one, it includes now starting to prepare reports. Okay, and we are talking about from the trial balance statement. We will be explaining this later. We can now prepare the final accounts, like the comprehensive income statements. We can prepare the statements of financial position. We can prepare the cash flow statements and their interpretations through ratio analysis. We can also prepare other reports for consumption, right? For the use by auditors. Okay. Now, but is that the end of accounting? No. We also have management accounting, and this one is mostly about both quantifiable data and even non-quantifiable data for decision making. So what we are saying is that there is another branch of accounting here, which we are saying is to help us manage the organization, make a decision. For example, if I know the cost of making a pen is 10 shillings, and from the market, if I sell it at 12, my profit will be 2 shillings. So the selling price is 12 shillings. This information is very important to us internally and to others. So management accounting is mostly used for internal purposes, as you will see later today. Alright? Now, cost accounting is a subset of management accounting, and you'll find we are settling cost centers so that we can be aware of many implications of our budgets, implications of other reports, break-even point reports, and so on. So, accounting is much more. It keeps on expanding and expanding, because as commerce becomes complex because of the digitalization of the modern economies. As the investments become complex, like the cryptocurrency economies, which are gaining currency at a very high speed. Different investments, you can imagine fiber optic investments. So the modern accountants need to be extremely updated, extremely qualified, so that they can help move the corporate world to other levels. Now, let us go back to people. So, a sales journal is just a book where you record the people you sold to on credit, the people organizations. That's as simple as that. The purchase journal, you are recording your creditors, the people you have bought from, the organization you have bought from on credit, you will pay later. You know, in business, most of the transactions are not cash-based. They are mostly on credit. Now, when you talk about return inwards and return outwards, return inwards is to sales journal, as a return outwards is to purchases journal. What am I saying? When you sell goods to someone or to an organization, if you sell goods to someone or to an organization, because of one reason or the other, you may get returns. We call those return inwards. In other words, maybe the goods are not of the quality the person wanted, they are broken en route or in transit, maybe they are not of the color I wanted, and so on and so forth. So when you return, we normally use credit notes to adjust that. The same case with us. If I buy goods from my supplier, okay, I have a right to return them if they have been oversupplied, for example, because I will be invoiced, right? Through debit notes, you can adjust that. Then cash book is the only book which is both a journal and a ledger. We'll be explaining more about ledgers later. So the cash book will record money coming in and the money going out of the business, and that is very important. And every entrepreneur does that. Money coming in, money going out. As simple as that. So long as it's coming into the business. Even if it is not coming to the business, okay, you can record and you can try to give them some titles or names later. And money going out. Money coming in, money going out. So if it's a donation, we will show it has come, but later we will try to explain what it was about. If I have withdrawn money for my private use, fine, I will record, but I will show that it was for private use. Otherwise, in accounting code drawings, right? Okay. The General Journal is a very, very important book. You know, I started by saying that recording of accounting tries to capture everything through the prime books of entry. And they are specific, those books are specific. Now, but to capture everything, such that we don't omit anything in an organization, a general journal or journal proper was born. It is a book that records any transaction which could not specifically have been recorded in the other books of bookkeeping we have talked about. The sales journal, the purchase journal, the return inwards journal, the return outwards journal, the cash book. So we have another book saying, wow, look here, you sold goods to someone, but the person is bankrupt. Where do we record this? Okay, we don't have a book to record this. We go and record it in the general journal. You come again and you tell us, look here, there's an error in our recording. How do we do this? We don't go back to the records and start cancelling. No, we don't do that. We go to general proper, then we adjust the error. At the end of the day, it means we have now full set of records. And I'm telling you, these records, even if they have been prepared through incomplete recording manner by someone not qualified in accounting, there's no problem. So long as you have the records, personally I can prepare final accounts for you. So long as you keep track of what you do daily, including those small expenses. Yeah, you have eaten lunch somewhere, You have given a donation to a blind person somewhere. You have paid fare. So long as you have all those details as an entrepreneur, as a small-scale business person, as an is, we can still have records for you. And later we'll be looking at what are the advantages of keeping records. Right? Now, having talked about books of original entry, the prime books of accounts, for keeping books, let us look at a very important principle in accounting, which will explain the next step about ledgers. Accounting is a science subject because it has standards, it has rules, it has principles. Now, in accounting, a fundamental maxim is to record a transaction twice, right? We must record a transaction twice. So what does this mean? And why should we do that? One, it means if I record somewhere, I have used 50 shillings, it should also record somewhere else 50 shillings. It tries to check each other. And that's why whenever we have even incomplete records as accountants, we can prepare full books of accounts. So long as we can trace at least an entry somewhere, we can complete the other entry on ourselves. But if you are qualified, then you should have the double entry principle, which states that for every debit entry, there must be a corresponding credit entry. To a layman, what does this mean? It means if you record a transaction somewhere, just record it again somewhere else before you continue to the next. As simple as that. So, to debit is to write on the left side of a book called ledger, and to credit is to write on the right hand side. Alright? Now, that principle is the backbone, is the lifeblood of accounting. You are not an accountant unless you master the double entry principle. You are not an accountant. Alright? And I invented a rule because through teaching I found my students were getting problems of recording transactions in double entry principle. So I invented a rule which says that debit any incoming account, credit any giving out account. Debit on any incoming account, credit any outgoing account. Saving account debit, giving account credit. And it applies whether you're dealing with expenses, whether you're dealing with revenue, income, whether you're dealing with current assets or non-current assets, whether you're dealing with any type of transaction. And it applies, and I have tested it and it has worked. Some lecturers can teach double entry in 1 week, and others in even more than 1 week for the students to understand. I teach double entry in 1 lesson, and the students will understand it. So basically, as we will see later, there are guiding rules in addition to my debit receiving account, my credit receiving account, which can aid you, okay, so that it becomes easier. So the double entry is so important because later, that's why you hear of something called balancing in accounting. Balancing. It comes from that accounting principle, such that we are trying to say, if we record the same thing on the left side, why don't we find the same thing on the right? And if it is not balancing, if it is not equal, then we are wrong. Prima facie, we are wrong. And that's why later on we'll be talking about errors in accounting, affecting the trial balance, not affecting the balance that we have solved. Now, so when we are recording transactions in accounting, you have to know something about classification of accounts or classes of accounts, so that you can open those accounts in the ledgers and you can record them accordingly. Now, when you open the accounts in the ledgers, like for example, sales journal records our transactions with our debtors. Actually, the debtors records. Now, in a period like 1 week or 1 month, we'll take the total of all those debtors. But now, you know, these are specific customers. So, in a book called sales ledger, we open each person's account and we record there. We have started now separating the accounts. So from the journal we go to ledger. So from the sales ledger, journal, we go to sales ledger. From the purchase journal we go to purchase ledger. So all our creditors, account payables will appear there. Kila mtu peke yake. Debit and creditors case may be. When we go to cash book, we will debit any money coming in and we will credit any money going out. Okay? Because I told you that is both a journal and a ledger. In the general journal, we will prepare it like a diary, because we have said these are uncommon transactions. So we normally prepare them like a diary. We say what happened, then we write why. That is the general journal. So the double entry now can be completed between ledgers and the general ledger. So in a specific ledger like sales ledger, we will have individual debtors accounts where we will have debit the debtors account, credit sales account. Now in the general ledger, we will have now one entry where we will complete the double entry by opening the sales account and then show the totals of the debtors for the period, 1 month, 1 week. But remember, this is manually. Now, to record the bookkeeping in a computerized world, especially using QuickBooks, the simplest application package, you may not go through all these, because in the QuickBooks, what you need is you need to know who are the customers and who are the creditors. So the customers you are selling to, the creditors you are buying from. So you'll have the orders done, the bills paid for, and things will move from the start to the end. So in QuickBooks, it is so simple. It is like driving an automatic car. Okay, bookkeeping is like driving a manual car, but the QuickBooks here, when you are recording using QuickBooks or Sage, you are like driving an automatic car. Because what happens is that the minute you place an order, the minute you open a name of a debtor, the minute you open the name of a creditor, all other corresponding accounts are recorded real time, until even at the end, the reports. When you go to the report section, you will see the records there. So it becomes very easy and very fast, timely. You can make a decision very fast, because the QuickBooks gives you instant reports, although you have just entered the first item as an input. All right. Later we'll get time and try to teach on how to use QuickBooks in an organization. So basically what I'm trying to say is that the bookkeeping now has ended up with the books of prime entry, in my view, and then you have gone to the ledgers, and we have also gone now to the next item, which is called the trial balance statement. Right? Now, what is a trial balance statement? This is a list of balances which are generated after you have opened your ledgers and balanced your ledgers. So the closing balance is now taken to a statement. It's not a ledger, it's a statement with the debit column and the credit column, where we will list all the closing balances. In simple terms, what are we saying? A trial balance is nothing but in a month, take all those your debit entries using the double entry, and take all those credit entries using your double entry. They must balance. That's what is called a trial balance. But we cannot do that because it will be a very long trial balance statement. What we do is that all specific ledger accounts are balanced, and after balancing, we carry forward the closing balance, and it is taken to the trial balance statement. If that trial balance is prima facie, we believe we are accurate, although later we will realize that may not be true. But if it balances, it's first evidence we are on the right track. So why do we do this? Trial balance has got the following functions. Number one, it helps us to test arithmetic accuracy of our journals recording, of our ledger account recording. Two, it helps us to prepare other accounts, namely the final accounts. The statement of the financial position, the profit and loss account, that is called the income statement or the comprehensive income statement. And then, as a result, it will help the auditor have some data to go through to certify your accounts as portraying a true and fair view, and then issue either a qualified or unqualified independent audit report. So what are we saying? One, financial accounting is starting from bookkeeping, where we used about 5 books of accounting. Then we went to ledgers, including the specific ledgers and the general ledger. Then we opened a trial balance statement. If you know, or if you can do accounting up to the level of trial balance statement, then we can call you a bookkeeper or a training accountant or an accounts clerk. Up that level you can do. Now from the trial balance statement, we can classify you as an accountant, because now we will be able to prepare the final accounts. The final accounts, namely the profit and loss account or the income statement, the statement of the financial position, mostly called the balance sheet, and the statement, the cash flow statement for the year. The cash flow statement for the year, according to the International Accounting Standard 7 and S amendment. Now, before we end up our lesson, let me go back to the final item. Why should we prepare accounts? Who are the users of accounts? Number one, the users of accounts include the organization itself. You cannot make decisions without information. Number two, the users of accounts include auditors. These are accountants who will examine your records and certify them as accurate. Number three, financial journalists use accounting data so that they can write their reports in our business magazine or week, in our newspapers and so on. Also, we have the shareholders. These are the people who own a company, and you find they need information. They have to look at the details in accounting, and that will be much clearer when we will be looking at analysis of the accounts through ratios. Such like reports are important to shareholders. Next, the investor himself. A person who has put his money in a company wants to employ someone to get records. The other importance of having accounting records is you will be asked for these certified accounting records by a bank which wants to give you or collect money. You'll also be asked about these records by government enterprises if you want a tender. And many come to us at the last minute. They bring all their incomplete records. You prepare for me, I have one day, I have, see, pressure. We work over because someone just slept on the work. You need to have audited account throughout. Pay the independent certified practitioner, and then let him audit your work and have the report for every year. That is very important. Also, other users of accounting data are the governments. The government needs taxes. They need to know if you are paying the right tax or you are trying to evade tax, right? Or even avoid tax. They need to know, and they can only know that if they come and check your records. And there are so many other users of accounting, even the big lenders like the World Bank. They'll have to look at the government's records. What is the ratio of your debt vis-a-vis the GDP and so on? And then they'll say, we are not going to lend you, you are risky. You are a very risky organization, country. So see, so the records are so important, and you cannot say, cannot keep it. Then lastly, let me advise business people, entrepreneurs. Many people think you can do without accountants. It is not possible. You'll either grow slowly or even fail on the way if you don't use the accounting services. You should consult accountants. They will help you in tax planning. They will help you in proper record keeping. They will remind you about changes in penalties, in taxes, and other principles, so that you don't get a problem. There's a time I got one of my clients had a problem because he had not noticed that the custom duty rate had changed. Then he continued paying at old rates. Later, the KRA wrote to them, to the organization, and he eventually paid about, I think, 12 million. Because of just a very small mistake. Someone didn't want to employ an accountant. Accountants are expensive, and you can see the damage which was done. So I told him, you need to have an accountant, because accounting is a profession, and you cannot just try to think you can do it. There are so many things you don't know. You cannot know. It's a profession. Come on. You cannot know it just by saying, oh, I have seen the debtor's amount, I have seen the creditors amount. No, it's much more. In fact, it can be a fraud. And unless you have trained in forensic accounting and so on, you cannot know if you are being conned and so on and so forth. So, before I end, just a short reminder and what you have just said. Number one, today we have talked about bookkeeping, and accounting starts from there. Bookkeeping, it's just a normal record keeping, and anybody can keep records. So long as you know how to write in English or Kiswahili, you can keep records. But here, we accountants show you how to keep it properly. Whether manually, there are books from the bookshops will tell you to buy, and will show you how to write properly. But in the modern world, many people are using what? Application software, and I recommend QuickBooks and Sage. Okay? Now, the books are the following: the sales journal, the purchase journal, cash book, the return inwards, turn outwards, general journal. You will also come across different names, like sometimes sales journal, you may find she has money, it has another name, his journal, but we don't like mixing things so hard. Now, when we record in the journals, the next step is to record in the ledgers. To record in the ledgers, you need to know or understand a principle called double entry. For every debit entry, we have a credit entry. That is very important. Debit the receiving account, credit the giving out account. Now, from there, you can also go to the general ledger to complete the double entry. Okay. From there, you can extract a trial balance statement, such as the list of balances in a month, in a week. Should not stay for long before you extract that one. In a computer's environment, I told you it is real time. Whenever you do the first entry, everything is adjusted. From the order bills to payments to receipt of money to debit notes, credit notes, all those, they will be adjusted until the amounts appear even in the final accounts, like the balance sheet. Then, I also briefly talked about the importance of accounting. Why should you prepare accounts? Who uses accounts data? Yourself uses accounts data. Your customer uses account data. Your supplier uses your accounts. Some suppliers cannot sell on, sell on you on credit unless you are clean. See, banks cannot lend you unless they look at how your books are and so on and so forth. And they have to be certified by a practicing certified public accountant. Okay, so you need to pay attention to those details. And the next lesson, we will try practically to show more about the double entry. Okay, we'll use a clipboard, try to show you how do you do it, because today I just lectured, you know, especially for a first time student can be a bit tough, but for someone who has done some accounting or bookkeeping, it's not something difficult. Before I complete, errors and omissions are expected. We are human beings. Thank you, and keep on subscribing to our YouTube. Karibuni sana.